I'm Deborah Borchardt, and this is your midday market update. Well, the market is feeling awfully darn good on this Tuesday. Everything is pointing in a higher direction, and generally the mood is pretty good. We're really positive feelings about this earnings season going forward. I'm joined by Keith Bliss from Cuttone. So, Keith, yesterday there was a lot of worry about this earnings season, a lot of angst, and now, Alcoa, even though we don't really put a lot of credence into their earnings, has kind of gotten everybody in a good mood.
Yes, because Alcoa's earnings did not fall off the table, which a lot of people were expecting, particularly since they play in the basic materials sector, which is supposed to be the weakest sector in this earnings season. But they guided down pretty substantially from the end of last quarter, and they hit the number, actually exceeded it, so that is a good sign. Interestingly enough, if you go back and look over the last 16 quarters, Alcoa's earnings performance from an EPS basis has very little predictive value of what's going to happen during the quarter, whether they meet or they don't meet. So it'll be interesting how this all plays out going forward. But the one sector that we're certainly interested in looking at for this quarter is going to be financials.
Right. Well, we do have some big names coming up this week. We've got JP Morgan and Wells Fargo on Friday. Why financials? Because the earnings reports for these banks are so convoluted and complicated. They're hard to make heads or tails of.
Well, we look at financials for two reasons. Number one is financial companies, and all financials, not just the big money center banks, the too big to fail banks, but also other credit companies, investment companies, things of that nature, for two reasons. Number one is that they are a large percentage of the S&P 500, which of course is the index that you've heard me talk about that I track mostly, and also they give a very good prediction for future economic growth and value inside of the United States. If they come out with not only good earnings for the second quarter, which everybody's expecting, there's supposed to be about an 18% EPS growth in that sector for the second quarter, but if they also talk about what they see into the future, credit demand picking up, a steepening yield curve, which a bank needs to make a lot of money, then those are good signs for the amount of money that they're going to make, and also a very good sign and a signal to small companies that if the loan window is open and ready for them to come in, they'll come in and they'll take credit, and of course the economy will just expand from that point forward. So I think financials, more than any other sector, are the most critical one to look at when you talk about economic health and future economic health for the United States.
All right, well, there you have it. Again, the buyers are out today, snapping up those stocks, and Keith is going to keep his eyes on the financials. They will get started on Friday, but then, of course, we'll see more coming out through the next couple of weeks. That's Keith Bliss, and I'm Deborah Borchardt with The Street.